Good morning, good afternoon, good evening, yWhales, wherever in the world you are today. Today's episode 12 of yWeb3, where we dive deep into the world of ever-evolving change of frontier and emerging technologies. On the agenda today, we've got a lineup of top headlines shaping the digital landscape, from the potentials of the crypto winter, legal battles in the world of cryptocurrencies, and major players making strategic moves. We've got a lot to unpack. But let's first discuss how influential crypto has become even more a world in the luxury brands. Plus, stay tuned for insights on the industry leaders as they share their thoughts on the future of Bitcoin. And that's just the beginning, because we're also really going to delve into some regulatory concerns, NFT creator royalties, and just really a lot of innovations around crypto and blockchain overall. Today is October 19th. Bitcoin is at 28,854, so fabulous to see it uprising. The Fed is still standing high at 5.25 to 5.5%, and the NASDAQ is up at 13,396 from last week. I've got some incredible guests today. Let's go ahead and get an intro from the fabulous Miss Lucia. How are you doing today?
I'm doing great. Thank you. Thanks for having me today. I'm super excited to be here. I'm calling in from Honduras, which, as you know, is where I'm from. I'm the CEO of Emerge and the co-founder of the Eternals. Emerge is an experimentation lab that focuses on edge tech innovation centered around impact, environment, and the United Nations Sustainable Development Goals. And then in my spare time, I work on advisory for central banks and governments and policymakers that are looking to roll out initiatives and projects that leverage the technology for meeting some of those targets as well. Yeah, that's me. I'm super happy to be here and very passionate about rainforest conservation and education and technology and impact, as you all know now.
Fabulous. Great to see you again. Thank you for coming back. And Siva.
Thanks.
Yeah, thanks, Jay, and nice to meet you, Lucia. My name is Siva Avvaru. I'm the managing director of yWhales Solutions. We're a boutique management consultancy focused on letting our clients figure out how to harness emerging technologies to weave into their existing business models without disrupting the inherent core nature of their businesses. If you speak with a lot of emerging tech consultancies, they're most likely going to tell you that you need to disrupt your business and you need to do X, Y, and Z. Where we come in is we actually do a very strategic assessment of how their business currently operates today, how their industry operates today, and where things like blockchain actually do make sense. Because as we know, everyone says we should tokenize everything and put everything on the blockchain, but not everything should go on the blockchain and not everything should be tokenized. And so what we do is we cut through a lot of the noise for our clients and actually make sense, help them figure out where it actually makes sense for their business.
Fabulous. Well, we've got a lot on the agenda today, so let's kind of dive right into it. I think one of the most interesting things that we saw this week was this fake news, kind of a little errant tweet that came out from Cointelegraph that goes, hey, a Bitcoin ETF has been approved. And for 8 whole minutes, people, retweeted and believed this was true. And we saw, Bitcoin skyrocket. I think at one point, a few of the exchanges were showing 33. So this is up from 26. It flew up way back. And then immediately, like I said, they recalled it and they go, nope, sorry, mistake. We heard it from a third party source. It wasn't validated, verified. Everyone said no. And it came crashing right back down to 26. So I think where this is really interesting is a few points. And I'd love your perspectives from both of the two of you. Is number one, it showcases massive interest in kind of integration into traditional finance. That really the ideas of self-custody, the ideas of, native Bitcoin trading and cryptocurrency markets is not as exciting as people think. The institutions, the big investors, are really all waiting for regulated, custodians to hold these things through an ETF. And the promise that we've seen over the last few years of, $100,000 Bitcoin, $150,000 Bitcoin, probably means that we have to move outside of the traditional cryptocurrency market players. So the other thing I think that's really interesting and scary is, who these players are that are moving them through. Because I think that a lot of the libertarians among cryptocurrencies and kind of got into this thesis was the anti-banking crowd. And let's be clear, who's bringing these ETFs to the market? It's the bank, it's Wall Street. So, Lucia, I'm sure this has been blowing up on all of your channels lately. What are your kind of thoughts over what we saw? And I think it's really positive in one sense.
Yeah, I mean, obviously, it's safe to say that, Bitcoin's price hasn't worked in these like rumors that keep popping up and down. And to be fair, on that tweet, there was a spot Bitcoin ETF approved in Europe. So the Jacoby Bitcoin ETF, has been approved for almost like a year. I think they delayed launching it because of, digital asset markets in general at the time. But ultimately, the tweet's not entirely wrong if you take geography and exactly what the tweet meant out of context. I think, it is ironic that the go-to-market strategy for a lot of these, Bitcoin products is through the traditional finance market. Obviously, you're talking about a technology that was inherently intended to offset a lot of the barriers that the finance market gave to it. And then now we find ourselves sort of being in a place where we see price action move heavily in response to some of these rumors. And I think, many players influencing this from an institutional side, but also it goes to show a lot of the shortcomings of the way that traditional investors, non-accredited investors, can actually access some of these financial instruments and products and services. And so how much of a good job are we doing in creating mechanisms by which people can enter this without the support or custodianship of traditional financial institutions? And I think this is really, at least what I've tried to take from it is, we're clearly not doing a great job if the reliance and the, uptick in price on Bitcoin is dependent on news that relates to the traditional finance sector taking over custodianship for so many investors. And so really, really interesting on that point. And then naturally, you sort of see that there's been a lot of delays, but of course, these conversations that the SEC is having that sort of hint at approval might also be an observation into how the market moves in response to it. Like we just, if they continuously keep putting out these headlines, continuously keep exploring how the market reacts to it, maybe we're feeding into exactly what they want to study. I don't know. Like it might also be that.
Yeah. And the question I'd like to pose over to you, Siva, is, and this is something that we deal with all the time. And I think it comes down to the concept of, do you want a legal custodian or do you want, self-custody? And, I very much believe that self-custody should be a right. It's something in, traditional finance. You can walk into a bank and walk out with cash or whatever you want to do. But really there hasn't been any, major institutional holders of cryptocurrency today. There's a whole bunch here, but let's also be clear what happens when not your keys, not your crypto is a real term because it happens all the time. The difference here is when you have a regulated MTF, you have the transparency, you have the insurance, these are like big SEC, tons of rules and regulations around there, which is everything that we as cryptocurrency, fanatics don't want for ourselves. But let's be clear, we want it for these guys to make sure that as we invest in a spot, especially a spot Bitcoin, that what we have is there. So how do you feel this is, Siva, like is the market really kind of stating we don't really want to hold the keys to this, like especially institutions?
So I think we're in an interesting point in the market. If you think of like when peak liquidity for the crypto markets was at, the peak liquidity of the overall crypto market cap is still smaller than some of the smallest commodities markets that are traded on regulated execution venues, right? And so we've hit this inflection point where it almost seems like retail liquidity or non-regulated liquidity has taken the market to its peak. I would say, venture to say 2021, 2022 was that peak of when we saw retail being able to move these markets. But what we just witnessed in the snafu a couple of days ago is when institutional participation enters the market, it moves mountains, right?
Yep.
And a big reason why is, and I think this is a concept that is often overlooked over by a lot of decentralist Marxists, in our space, is that tradfi and DeFi cannot play well together right now with an inherent core issue, right? DeFi, without the non-attestation of the counterparty on the other side of a trade, TradFi cannot legally interact in a DeFi decentralized manner in taking advantage of crypto-backed products, right? It's a big reason why we don't have crypto derivatives as a product yet in the market, right? And so when you think of like what's going to bring institutional liquidity, it's regulated entities. Individuals, KYC'd, can't really move markets, even if you're a whale, right? Unless if you have a regulated entity that's KYB'd and can now trade on regulated execution venues, right? And that's a big point because if you can get if you can get something like an ETF, if you're securitizing a product, there is a whole treasure trove of capabilities that are built into the securitization of a product that is all built for investor safety. If you go and do spot trading of Bitcoin right now, there's no certifier or backers of that Bitcoin, right? And so what you have is you have this issue of a lot of people losing, and if something happens, their investment is sunk, right? And what's interesting with the ETF participation is it's kind of the first instance that we're seeing where, hey, traditional market participants are certifying a product, but now this is a product that might actually have some backing and certification, should something happen to this product. And I think that's very interesting because I think what that does actually open up the doors for is much more innovative crypto-backed products in the capital markets space. And that's something that's really driven by the capital markets participants because they're regulated entities, regulated execution venues. You need to acquire the regulatory licenses to be able to play in this space. That's not something DeFi can do today. And it's kind of now we're at this inflection point where to move these markets forward, you kind of need to figure out a way on how to bring TradFi into the picture in a way that kind of uplifts both markets.
Yeah. Lucia, I see you snarling. Let's go for it.
Yeah. I mean, I just think it's really interesting because you're saying, okay, ETFs are generally considered less risky for investors and you sort of have this opportunity to be more protected. But if you look at the actual market response to these kinds of announcements, it actually fuels the speculative aspect of the market itself. And so it's just, to me, incredibly ironic that, this is like a circle of no beginning. So we say, Bitcoin ETFs are on the verge of approval, and then the market speculative, side comes out and price moves. And then the SEC delays the proposals and says, hey, we're concerned about market manipulation. And we're concerned about all of these other, factors in relation to surveillance sharing agreements and so on. But I just find it really, interesting that we're kind of stuck in this moment where we say, yes, you're right. Traditional finance and DeFi right now are not super compatible. And part of that is that they're innately incompatible. And so we're going to continue to kind of run into these hurdles of saying, okay, well, part of this is because it's a highly volatile, highly speculative, risky market, and bringing these traditional, aspects into it will add less, add protections or make it less risky. And yet that in and of itself unleashes a risk response from the market. And so I'm kind of seeing this as we're going to keep seeing these new cycles repeat themselves for, the foreseeable future. But I am very keen to see how the Jacoby ETF performs in Amsterdam and sort of, see what example that sets for the SEC to sort of, get their ducks in a row and say, okay, we might let one of these proposals go through at some point.
Yeah, the point I want to bring in, and we can jump to one of the next articles because I think it integrates in here, is Morgan Stanley, who one of the largest traditional asset holders on the planet, is saying, hey, it's the end of the bear market. That's news to me because I still feel like we're in a winter. So if we've got the TradFi people suddenly becoming bullish on cryptocurrencies, I think that's a huge win. Where I kind of want to throw this on here is it really showcases that let's be clear, we went from a couple $100 million to a couple $100 billion in the cryptocurrency market. We capped out right around $3 trillion and came kind of crashing back down. Even at $3 trillion, that's a fractional, it's a teeny little bitty market. And so, we want to say that, blockchain, and I started to use this term, blockchain-based finance, is really the future of the world's economy. And so the concept of cryptocurrencies is just one of these little things here. And, so we're seeing the rise of real world assets. We know this is coming. We see, a lot of people working on it. Lucia, you're working on it. Siva, you and I are working on it. And so I think that it's really interesting to see some of these people that are now coming back and saying, hey, these tokens, that are backed by nothing, we see them becoming more valuable. At the same time that we're seeing the technology mature enough to the point where we can put real assets, real value, real title, is able to be starting to put on chains through regulations like MiCA. The United States is deciding not to participate at this point, Lucia, but I'd love your kind of thoughts on hearing bullish news from the TradFi guys.
Yeah, I mean, I'm also living in your market. I'm not living in their market yet. At least that's what my wallet tells me. But I think, to be honest, that article was interesting to me because it was really looking at historical data. I don't know how much of it is a prediction on what's about to happen. And this notion of a spring led by things like MiCA kicking in, led by, outside of the US, it's sort of gaining real traction in a lot of different countries, huge conversations on the use of stable coins and, the requirements to use stable coins in certain use cases. So, and then also, we're looking at a halving in April. That's obviously going to stir up a lot of interest, a lot of demand, a lot of movement on price, and which will obviously elevate the rest of the market. But so I think there's a couple of things that, sure, historically speaking, have done very well in helping us recover. But I think the gist of that article is really that it's looking based on historical data. There's been a turn in the market when we're 50% increase from our lowest point in the market, and we're there, right? And on top of that, we've got the halving, and on top of that, we've got this regulation kicking in. And so these sort of are a perfect storm of events in order to get us into recovery mode. How much of that will also be impacted by other events? I think, we are on the verge of a couple of world wars, and we're also, looking at some incredible scrutiny from the United States. They don't want to participate in a lot of this, and naturally that's going to have a huge impact in our ability to recover, because the truth is there are a lot of investors in the US, based in the US, and the US dollar and on-ramps and off-ramp are, something that's pretty critical to the space so far. Obviously with Coinbase setting up operations in Ireland and then being able to deploy, and once they're able to fully tap in to the investor base in Europe, we'll see what happens there and how much, investors are able to generate some traction and sort of help push along recovery. But I think overall, I'm optimistic because obviously I'm very biased. And there are a lot of things that are creating these perfect conditions for recovery. I just think it's, to me at least, not enough to really say with certainty that that's where we're going to be in a couple of months.
Yeah, I think the Morgan Stanley thing is just a giant PR push. I mean, if you dig underneath the hood and you look at Morgan Stanley's history with Bitcoin, you would look and see in 2021, they tried to do a filing with a Bitcoin ETF with NYDG. And then if you look at the timing of this announcement, a couple of days ago, I think last week, Morgan Stanley announced that they are planning to launch one of the first mutual fund to ETF conversions for Bitcoin. So the timing is very suspect, right? You come out and you're a substantial market mover in the capital market space, and you've got products, you've got an inherent interest that you want to push your own products. And one of the ways to signal that is to say, hey, Morgan Stanley, this is the end of the bear market. Oh, by the way, we're launching these Bitcoin products. It's no longer a bear market. Let's invest in these things, right? It's a market.
In fairness, though, Siva, they've all sort of done that at certain points in time. You've had the CEO of major financial institutions be, very bearish and then suddenly be ultra bullish once they're building something. So, I think you're right about that. Also, they're not wrong about certain things that are happening in the market that could lead to, it's one of those things, it's almost like reading a horoscope where it's just enough general information to be able to give you a conclusion that is possible, not, necessarily a certainty, but it's close enough and relatable enough that you feel like they might be onto something, but it's just one of those things where enough is true, but it doesn't lead to a certain outcome at all.
Yeah, and let's also take in mind and remember a little bit of how these players really work. Bitcoin and cryptocurrencies are not regulated assets as of this time, especially in the United States. So the SEC has no purview. So this is the best time for them to say whatever the hell they want, to push the market up, down, left, right, whatever they want to do, because there is no, they can say whatever they want. He can, Jim Cramer can go on there and say, screw it, dump, the thing's a horrible, horrible mess. And then, 90 seconds later, the thing's shooting up, 20, 30%. But that's a very different story if you have an analyst saying, hey, here's my thoughts on this. When you have, Larry Fink, the CEO of BlackRock, stating it, he can't do that with a security. You can't say Amazon's going to go to the moon. And there's a lot of rules and regulations around there. So I think that they're kind of taking their slams at it where they can right now. But there is somebody who definitely is hurting the industry and hurting the market. We're seeing, Andre already knows which article we're going for. So one of the things is we're seeing, and you actually just said it a few minutes ago, Lucia. So we're talking about, all this innovation, cryptocurrencies, Bitcoin, everything like around the world. It is a phenomenon. Like I travel the world, same as you, and everywhere I go, blockchain is a unifier. Cryptocurrencies are a unifier. Like there's clearly like so much momentum here. It's unlike anything we've seen since Web 1. However, the country that really invented the web is just choosing not to participate and pushing, a lot of these major innovations. So like you just said, Coinbase is moving to Ireland to take advantage of MiCA. Siva, we're launching a project and we're moving over to the EU for it because we have people like Elizabeth Warren here is now who is leading the charge to, again, continually try to shut down cryptocurrencies, stating that they're funding of terrorism. Let's be clear. I've read these articles. I've looked because please let's take a look at this. This is like a 0.0001% chance that cryptocurrencies are being used to fund actual terrorism compared to fiat dollars, cash, and let's just say a lot of nation states that are actually doing the funding of some really horrible things around the world. So pointing your finger at a bunch of meme coins and nascent technology that needs to grow, I think is highly irresponsible of a U.S. senator to continue to do. I think I said that as strong as I could. Lucia?
Yeah, I mean, this is one of those things where it hurts me that it's even getting as much attention as it's getting, because the number one currency in the world that is used to fund terrorism, the number one currency in the world that is used to launder money, the number one currency in the world that is used in illicit markets is the American dollar. And it's done via cash, and it's done through banks sometimes, and it's done through business sometimes, and it's done through governments sometimes. And so the idea that a percentage of funds, and I think it's something was it 130 million that they said or something like that? They had ballparked. I think
about 130 million over a 2 or 3 year period.
Okay, we're talking about billions of dollars that are moving in this kind of conflict, both in Russia, Ukraine, in Israel, Palestine. This is absolutely a multi-billion dollar situation, and they're making a big giant splash of 130 million that they're not even sure about because they're complaining about the lack of traceability, which means they haven't even done proper due diligence on transaction flow, which you can do through a lot of these cryptos. And so it's just interesting to me that, we are giving so much time and attention that they are hopping on this anti-crypto agenda, possibly to detract from what's actually going on. American dollars are currently, as we talked about prior to starting the recording, they're funding both sides of this, and they're doing it through American dollars, and they're doing it in billions of dollars, not in $130 million. And so it is highly irresponsible for people to fall into this trap of thinking that crypto has this huge footprint in global black markets and in global terrorism and in global money laundering, when this is happening with, within institutions and within structured monetary systems that are regulated. And it's, literally a drop in the water in proportion to what's being funded, and it's funding both sides of the situation. And so I just am very frustrated by this headline, this article, this line of coverage. There are many reasons why this is ironic and hypocritical to go down this path. And I don't know how much more strongly I can say it, but to be frank, it's quite grotesque to think that that's the lens that they're going to be focusing on, when realistically speaking, right now, both sides of the conflict are being completely funded, and most of that funding in the billions of dollars is coming in fiat.
Yeah, and to kind of go on to this, there's a lot of horrible things happening in the world right now, and I look at that same $130 million is the same thing she's been pointing out for 3 years, and it's actually a much smaller amount than that. She's using peak of the bull market, what some of these cryptocurrencies are worth. They're not worth anywhere near that now, and in fact they moved years ago. But I think Siva, I want to pivot over to you on the technology side of this. Cryptocurrencies are one of the worst ways to try to launder money. This is we have people that come to us in yWhales community, almost every month, and they have funds stolen or something happens. And it's give us 5 minutes, we can trace it for you. Like, it's not hard to do. It's the easiest thing to know where it goes. And then you have the control of the on and off ramps, because they've really, kind of limited these things so much.
Yeah. Unless if it's like something like Monero, right? And it's funny because, this reminds me of, and I don't know how many people remember this or are aware of this from like 10 years ago. If you guys remember the Silk Road. And the Silk Road, overwhelmingly at its peak accepted Bitcoin as a primary form of payment on its marketplace. And so a big reason around around all the negative fanfare around the Silk, minus, what they were actually selling and all that good stuff, was that there was a budding narrative that, hey, Bitcoin is responsible. People were doing kind of a Socratic logistics mind exercise. If you buy illegal stuff or doing bad things on the Silk Road and you're able to pay for those via Bitcoin, then Bitcoin is responsible for all of the bad things that are happening on the internet, right? And that was a big narrative around what led to sort of the demise of the Silk Road, right? And so I feel like this has got very eerie, like similar parallels in the way that Elizabeth Warren is framing her whole anti-crypto army agenda, right? Without necessarily inherently understanding the core concept of what Bitcoin is or what cryptocurrencies are from a technology perspective. And she's just tackling kind of symptoms versus like having an understanding of the root nature of the coin or the construct, right? It's, hey, people are using this for bad things. Let's cut it off, right? But people are going to go and find bad ways to do fun, bad things in another way, right? You turn off cryptocurrencies, what are they going to go to? They're going to revert back to the US dollar.
I can give her a list of a dozen things around cryptocurrencies that she should write letters on and she should find ways to fix. Like, this is just, it's not even in the top 50. Go for it.
Lucia.
I was just going to say, can we just point out, though, the irony of the fact that, when the Russia conflict came out, there was her statements around, Russia could be using crypto to fundraise for blah, blah, blah. And there was no statement made on Ukraine's use of crypto. And so when you look at the situation now, she again is focusing the lens on, okay, well, Hamas and terrorist groups and jihad, are using crypto. And so if you look at it, she's actually not complaining about the use of crypto. She's complaining about the use of crypto from specific people. And that's a really interesting thing to me, because that sort of informs the way that they're going to think about policy. It's okay to do it as long as you're on our side when you do it. Just make sure you're not against us when you do it. And so then it'll be, a rallying cry. And, obviously you can feel whatever which way about all of the conflicts that are going on in the world. But I think the biggest hypocrisy here is that she purposefully is using her anti-crypto agenda at very strategic moments to call out very strategic people that are feeding into this, agenda that is a longer, more complicated game than, people that are only paying attention to a crypto market or crypto announcements are sort of looking at. So the wider lens is really like, this is actually an agenda that's not just feeding to the financial markets, but it's actually saying this is a political statement about who can and who cannot use these technological tools.
I really love that perspective. I think that's a really good perspective that a lot of people aren't really thinking about, right? It's almost funny, right? It's because right now they're tackling crypto because crypto is a method of facilitating commerce that the U.S. government has no control over. They have no insights into, right? Versus whatever is on chain or whatever they do some analysis and what have you, right? But they don't have the ability to control it. Whereas, hey, they're fine with drug dealers and all this other illicit activity happening with the U.S. dollar because there's some return back to the U.S. economy, right? There is an inherent advantage for them using the U.S. dollar. But with a crypto, there is no, at least in the immediate return, there is no immediate return back into the U.S. economy, right? And so it's like, hey, how do we get this narrative to a point where we get the public, or at least a substantial enough of the population, to rally behind us, where we then can say, yes, we are a fan of cryptocurrencies, but we like them if they're used in this manner, right? And if it's our narrative. And I think that's the bigger, I think that's what you're trying to hit on here, Lucia, which I think is bigger issue that people need to be aware of this whole narrative that Warren and co are kind of chasing after.
And I think one of the things, let's also be clear is, and I'll put it in this perspective, and let's kind of shift over to the other side of this. Like, how can crypto do good? Because for all evil, what's the other side of this? And if it's true that it can be done, bad things can happen with it, then what's the good that can come out of it? And I'll say that I think this is the exact same example, and why I take her response as just absolute garbage. So a couple of years ago, when there was the kind of hurried withdrawal from the United States out of Afghanistan, we were reached out to by a number of humanitarian groups and NGOs that said, hey, we have this serious problem that women are now no longer allowed to work. They're no longer allowed to leave the house. They can't earn money for their families. They can't, there's these challenges. How can we help train them and pay them so they can buy bread? And we went through this exercise as a community. There was, probably 100 of us that worked on it. And the reality is we can, you have any type of phone, any type of internet access, we can train you to do a job. We can reward and pay you to do that job. The challenge you have is the on and off ramps. Is we can give as much crypto to these people as we wanted. They couldn't buy bread with it. There was no access to the bridge, that traditional finance system, and so that's kind of that rub right there. Is that OFAC is OFAC. KYC, KYB is around the world for a reason. And so I think attacking the method of, how people move it, whether it's stocks, bonds, Treasury, T-bills, or cryptocurrency, it's irrelevant. If whoever purchased that, if it was purchased legally, then we know where it is. It's a matter of controlling who the on and off ramps are. And right now, there's no off ramps. There really isn't anywhere in the world. And we're even seeing, my next article is Binance is just leaving the United States. They paused withdrawals. And whether you like or hate Binance, I mean, it continues to hit the industry in the United States, which pushes us further and further behind in the rest of the world.
Yeah, it's unfortunate with kind of the current state of regulatory perspectives in the US on this industry is quickly, I view personally Web3, blockchain, crypto as this next frontier of technology that's going to be able to catapult the digital commerce to a whole new level. And the US had a very great footprint into being a hub of innovation for this. But the past year and a half has, especially from Gensler and Warren and a lot of other US regulators and politicians, we're starting to see a significant shift where all of the thought leadership in this space is starting to migrate over to mainly the EU and the Asian markets because, hey, ESMA and the EU was like, hey, we will provide regulatory guidance on how all 27 member nation states should treat digital assets as regulated securities. Now they've got a regulatory framework that now traditional market participants and other people that want to play in these spaces have some sort of guidance to do so. We've got here in the SEC in the US, we've got Gary Gensler acting via, fines and retribution and trying to enact legislation and policy via, slaps on the wrists. That's not showing any sort of collaboration. That's not promoting the benefits of this. If you eventually want to create some sort of USD stable coin or some sort of, federal standard for how payments are done here, right? Why would the top innovators in the space want to continue to work within a hostile environment where the claws are always out against them? Or you can go to the EU where you're starting to see some MTFs that are starting to look at, digital backed assets. You have Singapore and Hong Kong, and they're starting to do treasury bills and they're starting to do green notes and bonds and all this stuff. It's like trying to be on the top of innovation. And then a huge metric here, we have a very, very skewed lens from a Western perspective, especially being in the US, where everyone here is virtually banked. But a lot of the world, and McKinsey put out a report a couple of months ago, 80% of the world's population is still unbanked, right? And that's very powerful. When you think about what the good of crypto can provide, when you think of the traditional financial markets, there's a lot of intermediaries that kind of provide a certain construct for the underbanked or the underserved, for them not to be able to participate in these markets in the way that we have the luxury to do so. So really the biggest benefits is to the markets and to the emerging markets that have to deal with corruption, that have to deal with certain entities or their governments that they have no confidence and trust. And that's where a decentralized or an alternative currency like this really provides some value. And I think that disintermediation is a huge proponent where traditional financial market participants are like, hey, you want to get rid of brokers, you want to get rid of banks. Well, of course, we're going to do everything to go against that, right? Why would we want you to hold these neobanks or something of that nature?
Yeah.
That said, I would argue that obviously not saying that it is a panacea, right? Because there are plenty of DeFi projects that have put a lot of liquidity from investors that had limited liquidity to start with at risk. And so I think I would categorize there's a couple of short-term good that this technology can do. There's long-term good that this technology can do. I think what you're saying absolutely fits into this long-term game of saying, can we get this right and disintermediate and use it for greater traceability? And I think that's where a lot of the interest in stablecoins is coming from. It's this idea that inherently it's less speculative. So that means it will protect investors a little better because it's pegged to something that we trust. And so, we would be willing to explore, let's say, voucher programs as one of my clients, government clients is looking at, or subsidies or digital currencies that sort of can be used locally in a way that feels like we can trust it more than something that we just don't understand the volatility around. But at the same time, I think there's some really short-term examples of how this can be really helpful. And I think it fundamentally, when you understand the uses of money, very often it comes from a financial perspective, and you say money is useful because it's a means of exchange, it's a means of investment, it's a means of peer-to-peer trade, it's a means of settling payment, it's a means of borrowing and building credit, but it's also, very importantly, a means to power and these power dynamics, and it's a means for control as well. And so when you look at some of the ways in which conflict manifests, you see, for example, when a country is sort of shutting down and trying to prevent people from leaving the country, as we've seen in Venezuela before, for example, one of the first policies that they enact is a limitation on how much money you can convert into American dollars, how much money you can pull out of the country, how much money you can sort of take out from the bank in one shot. And so they start controlling all of the ways in which people can access money, and they're afraid of the response that might lead to in relation to the situation on the ground. And then you see right now, for example, you've got a blockade on aid coming in, and how do you get effective aid into the region? How do you support on the ground operations? How do you get money to people in a really fast, way? How does that happen in a natural disaster context when, something happens, there's an earthquake, there's a storm? How quickly can you get resources to people? How quickly can you get people funded and reimbursed and supported in some way for the, work that they're doing in rescue missions or things like that? And so when you look at the short-term transferability of money that is sovereign and therefore lacks the ability to so wholeheartedly control it, then it becomes incredibly useful to do good because it's a means to making sure that people can be deployed and compensated and protected financially from environments where very often money is controlled or the access to money is controlled. And I think that that's a really powerful statement to make on behalf of a technology that is proposing sovereign money. And at the same time, a great irony, and going back to our first article, which is, that the fact that, we're relying on the incoming of institutional finance and the incoming of this guidance and these rules around access to money and control of money and protection of money and so on and so forth, really sort of clashes a little with this philosophy of what is the immediate good that this money can do in situations that we're sort of seeing around the world today.
That's a really an amazing response there. I love that.
Thank you.
Yeah. So let's shift gears just a little bit. And, we've been talking about cryptocurrencies and Bitcoin quite a bit. So now let's shift over to a little bit more of the degen stuff, which is identities on chain. And a little tiny country called Palau. I've always wanted to go diving there. It's the size of a speck in the ocean, wants to become, a crypto island. And they're starting with issuing digital IDs, as forms of NFTs. And, clearly they did all their homework. They looked at this and they said, okay, we can issue a thing. It puts on the blockchain and we certify it and validate it. And here you go. And just like every other crypto project with people that really don't understand the space, the first thing that happened is it got hacked. So, it is, I agree with the concept. I think I applaud them for saying, hey, we want to have these digital passports. They're validated. They're able to be validated on chain. But blockchain itself is not just perfectly secure. You have to secure the smart contracts. And smart contracts are not designed for multi-users. A Genesis wallet is not a multi-user thing. That's just, so whatever the case is. So we're really seeing a lot of the, just the fact that blockchain is starting to mature. Nation states, again, are trying to utilize it. And Siva, we work on this type of stuff all the time. It's what they did is not wrong. It's just, of course it's going to get, scammed and hacked, because they really don't have a true, there is no true identity layer. There is no true source of truth, and people don't understand how to decode, smart contracts in the beginning. So it's like, okay, it looks like the exact same thing I want to see. So fake IDs out of Palau took 90 seconds to make.
Yeah. I mean, this is one of the first questions I ask all prospective clients when they engage with us is, why do you want to do this on blockchain? Why does it make sense for you to do this on blockchain? Well, more often than not, 99%, and I'm just making that statistic up, but that's what it feels like. It's a pretty poor use case. You're adding another layer of complexity. You're adding another layer of data risk. You're adding another layer of, just in what we know from traditional enterprise tech stacks, you're adding another potential failure point. And so I love the concept. I think identity, especially when you think about self-sovereign financial identity being catalyzed by blockchain, is going to be very powerful. But putting identities fully on chain, I don't know, but using the blockchain as sort of a centralized data highway to validate and attest identities as a way to prove, KYC AML, can I prove that, the counterparty on the other side of this trade is who they say they are? That's where I view a lot of powerful potential for blockchain in this space. For example, we apply, if I apply for the most complex mortgage loan product, in theory, I have to supply the same information of my identity for a student loan, for an auto loan, for a personal loan, et cetera, et cetera. Why do I have to submit the same information over and over and over and over again to all these different lenders, to all of these different providers, when ideally, in a perfect world, I could have maybe, and I don't know what this construct is eventually going to develop. Hopefully someone creates this, but it's, hey, I have my own personal identity that is validated on chain, right? The metadata is validated. And anytime I want to go and apply to a mortgage or a student loan or an auto loan or a personal loan, that same data payload is validated and attested and authenticated. But now I am in control of my data. The lenders don't house that data. The people I'm applying for the capital don't own the data. I still own the data, but now I'm providing an open access for them to validate and trust and authenticate that this data is true. And then there's third-party verifiers that can do that as well, right? I think that's where a good use case for identity is going to be. But when you start putting everything on the chain, right, it's like, why? I mean, I think you're going to have these people that, we need people like this to kind of test everything. And we need the people to okay, we put IDs on chain and they got hacked and they got defrauded and, multiple things were created and blah, 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 right? And that's a learning lesson, because that's how we learn, okay, this is where the technology could apply and this is where it was a poor use case, right?
I really appreciate how you
keep going.
Sorry, I was just this is actually something I care very, very deeply about and have done a fair bit of work in, but I think I really appreciate that you're saying, this attestation and verification, because I think we really need to stop thinking about it as identity and start thinking about really the functional aspects of what belongs on the tech stack in the first place. I think it's going to be really, really hard to get people to hold their own identity, be completely responsible for their own identity, and then sort of use it for these functional purposes, because we've already sort of seen from the way that we've seen our space develop that, holding the keys to your own wallet is just not something that a lot of people are interested in doing. And they're actively searching for custodians. And we keep coming back to this first article on the value of institutional investors being custodians for people that don't want to do it themselves. And ID is even much more fundamentally important than any of the options that we currently have in our space. And so I think it's really important to know the user experience around identity is very complicated, because yes, in theory, in an ideal world, you would be able to have this sort of ID that you own, that you control, that you maintain, that you manage, and then you sort of share it with all of these different systems. But unfortunately, we haven't reached or are even close to reaching a point where the majority of people could do that. And if you build an identity system that inherently does not include everyone from the get-go, then you're already creating an inequity problem that will be very difficult to resolve in the long run. On top of that, it's a very interesting question of, the logistics around this identity. And if you were to be the owner of it, at what point does it begin? And at what point do you gain custody of it? Are you a child that is 12 that is expected to maintain your ID? Or at what point is there a turnover? And what does that mean for the data that's found within it? And, what does that mean for families, for example, that might split up and then you might end up having step parents? Then how does key management work in the case of adoption? So there's like all of these logistical questions on what it takes for people to actively be the owners and custodians of their own identity. And the big problem here is that we see a lot of the innovation in the space coming from such a functional perspective, where you are thinking about it from the lens of KYC AML, or you are thinking about it from the lens of accessing a financial product or service, or an education product or service, or whatever product, health related product or service. And unfortunately, when it comes to identity and identifiable data, like national identity data, then we're talking about like an entirely different ballgame that goes all the way back to your birth. And there's a whole 18 years and questionably even longer that you're absolutely not in proper form to maybe be the primary custodian of your own data. And so there has to be mechanisms for a country to be able to understand and mitigate and manage those risks. Putting my nerd hat on, what I find really fantastic about this too is that in the earliest phases of the national identity system, the only things that were recorded were actually events, reoccurring events, birth, divorce, marriage, land ownership, etc. And now we've got this like really key data set around biographical, biometric information that is so much more sensitive. And we constantly believe that a system needs to have this data be permanently stored in order for us to have this ability to continuously verify or credentialize things. And to me, this question of the permanence of data is one of the biggest risk aggregators that there is, because you're essentially saying you need a system that is safe enough to be able to hold this data forever. And that alone, and that arrogance of saying we need to build a system that can hold this data forever, is really like primal territory for people that want to hack these systems or that want to, replicate them in counterintuitive ways or in bad ways to be able to leverage them, because we are so obsessed with keeping this data and continuously verifying that we're not thinking a little bit creatively about how to design a system that doesn't relate or doesn't require the permanence of data. And I think that that's a consideration that we really need to be thinking about as well.
I absolutely love what you just said, because when we're talking about these tech stacks, we're talking about like technologies. And I always go back to Web 1, because everything we're seeing, there's nothing new here. It all rhymes with things that we've seen before. And I was actually thinking about this related to this on the way to work today, which is, you have to have like various technologies in your tech stack, whether we're talking about, the internet, whether you're talking about security of IDs, you have to have all these various differences and safeguarding across the way. And what this reminds me of is like those early websites that were made 100% in Flash. Like 100% of the website was just Adobe Flash. And they were slow, they were garbage, they were absolutely terrible, but it was this new technology that someone, that some company got sold on. And then as soon as the web started to evolve, you had to throw the entire thing out and start over. And that's really what I'm seeing here is like blockchain absolutely should be integrated into almost every tech stack around the planet in various measures. But you don't bake an entire cake out of one ingredient. And I think that's what we're seeing a lot of people is just not understanding like it's a layer. It's not the whole solution.
Right. Jay, if you remember, we had an interesting conversation last summer with a pretty old church in the EU. And
yes.
one of the things was when and Lucia, you hit on this point that I don't think a lot of people kind of really realize is like data longevity and data permanence is still a relatively novel new concept in terms of data architecture and data history is really only the past 20, 25 years. So one of the first one of the first scenarios when we were talking with that church was, hey, and this was at I think it was almost 2 years ago, and it was when NFTs were at the peak. And it's like, hey, we want to digitize all of our, old works as NFTs for the idea that we could have digital longevity for these products as these physical assets deteriorate over time. And it's really interesting because we've never really, I don't think a lot of people have thought about like, how does data live permanently for hundreds of years, right? Versus books. Like we know if something goes in a book, it's going to last as long as that physical book exists, right? And now we have a church that has the only copy of this piece of work from 1450, if we keep changing data constructs and what it means to be data permanent, and the ledgers that these things live on, and who has access and who has the ability to modify that, like we haven't thought through what that means from a for the generations 200 years from now, right? Like what if my grandchildren want access to my data records 200 years from now? And I would love, to be able to just have them full exposure into my life so they can have all this history. We haven't thought about what that longevity means just yet. How are we going to facilitate the success for that? And I think that's something that it's still such a new topic, just in the world of data. And it's how do we get to that point?
On the flip side, sorry, go ahead.
Oh no, I was just going to say, I think it's an interesting area for us to explore, and I think that's a very powerful capability that blockchain can bring to the table that we haven't had before.
Well, the flip side of that, though, is that how much, do you really want that permanence of data, and in what context? For a person that lives an ordinary life, then sure, I mean, it would be wonderful. But then you might think about, for example, a person that was rescued from human trafficking. They're given a humanitarian sort of visa or permission to exist within, let's say, the United States. Then that person gets registered. They get issued a new ID because they would have not had this kind of paperwork or anything before. So the context of the reason they're receiving the ID is that they're a sex trafficking victim, or used to be a former sex trafficking victim. How long does the context within which your ID was created follow you? And does that mean that for the rest of your life, your ID will be pinned to this notion that you are a rescued sex trafficking victim? And so really, this idea of permanence, data permanence, is a very interesting one, because ID doesn't just happen, right? ID is issued within a context. You are born, you are, reach the age to have a driver's license, you are sick and need some kind of specific medical ID or medical insurance, you have certain types of vaccination records, you might be recovering from something, and so you might have immigrated for a particular reason. And how far down the line do you want that context to continue to impact the way that you coexist in the world and the way that you are able to access services and products for the future? And so when we think about the permanence of data, there's a legacy aspect, absolutely. There's a long-term, consistency of verifiability, because you need to be able to prove ultimately, who are you? Are you actually who you say you are? And how consistently have you been this person, so that we can actually trust that identity, and we can trust you as a person, right? But that also begets the fact that there are contexts within which people are edge cases, or are maybe not even edge cases, because there's millions of people that migrate.
The right to be forgotten.
Exactly. So where does this sort of, but even the right to be forgotten, and also the right for your context to be forgotten, and for you to be able to eventually have a regular ID and a regular presence in the world, rather than always being sort of accompanied by all of the reasons why you obtained, or the forms within which you obtained this identity in the first place. And this would be true for millions of people around the world. And so I think as we sort of look toward the design of identity systems, we aren't asking enough questions. We aren't spending enough time in this research and use case and life experience and nuance playgrounds that we should be spending in. And we're going straight into the functional. And I think that that's going to be the reason why there's a disconnect between the private sector and the functional, KYC AML initiatives that are taking place, and this dream of having, digital legal identity for all.
I think I saw that Black Mirror episode. And it's but I think that there's the early there's some early phases of this, and we already know in the United States, when your juvenile record goes away. So if you do something as a youth that does catch the attention of the law in a bad way, then they give you a reset. That doesn't generally carry forward. That there are reasons why there's statute of limitations. There's all sorts of things. But I think this is a fabulous conversation. We really should just do an entire episode on the theories and theses of what should be permanent and what shouldn't, and how should people manage this. So on our last story, the idea of permanence not being very long, Reddit, who's one of the I think they're a top 10 social media site on the planet, they went full cryptocurrency during this last bull run. They introduced avatars, NFTs. They don't call them NFTs, they call them digital collectibles because they're smart. But they also integrated a couple ERC20 tokens, the moons and the bricks, and heavy trading. These things are moved around. They're used as currency. You get so many upvotes. They give you your little moons and everything else. people bought into this. They spent money on this. They did the things that the degens do. They trade them. They formed liquidity pools. They hedged them. They overs, shorts, futures, you name it. And now all of a sudden with the regulatory, framework in the United States, they've killed it. And I think that this is really, indicative of like just a really bad way to continue to kind of push on the troubles that the market showcases. But I also really want to come back to, I think that this is an inherent issue with the ECR20 protocol. I think it's just too easy. There's not enough here. And I've said over and over, it's not that ECR20 is a failure, but I think that we can do better, and we really need to move far, far, far past this protocol, because it's if you look on Uniswap, like 99.8% of all ECR20 coins are failures. And it's really hard for investors or people that want to play with this to understand, well, okay, it must be garbage because every time I buy one of these things or trade one of these things, it just goes to zero. That's not a lot of, market confidence. Lucia, I don't know if you had any moons. You seem like somebody to be very popular on Reddit.
Thanks. I actually am anonymized on Reddit.
Oh, of course. No, it's yeah, no, like Twitter, I'm who I am. On Reddit, nobody should know.
Yeah, Reddit, not so much. But I think obviously, like, I really appreciate Reddit for the way that they've shown up in experimenting their way through understanding some of these applications. I think obviously, user experience is still not great. Like, sure, you can do all of these things on Reddit. I've played around with some of them. Is it super user friendly? No, but also Reddit was primed to be a very good experimentation space for this, because even before they had this, they had, the ability to upvote and downvote and to send medals to people. And so they had some of these transactions already in place for you to be able to easily transfer the experience into like a crypto friendly way. Naturally, like, they were going to run into barriers the second that there was nothing more that they could expand toward. Like, it really is a community initiative, community points are pretty much, they live isolated within Reddit. And so I think, we're going to keep seeing a lot of these like brands try to experiment with crypto, try to experiment with NFTs in the form of loyalty. I myself am, working on a few initiatives around that. I think obviously, like, the second that it starts to look a little too close like money and you're operating in the US, you're going to run into the barrier of the SEC. And so, do I have thoughts on it? I really respect the approach that they took. I respect the playfulness within which they did it. I think there are still way too many barriers in looking at this as like tokenized opportunities. And I think even with NFTs, if you don't do it or design it very carefully, then as long as regulation is an impediment in the US, it's going to continue to be an innovation killer. And that is quite devastating. I don't see Reddit sort of doing this from any other part of the world, because I do feel it's a very American heavy user base. That said, I think that it's an exciting time for people thinking about tokens and thinking about non-fungible tokens in very creative forms in relation to brand equity, brand participation, and engagement. So I'm still optimistic about the way that these things can happen. It's just, I think that this was a very big experiment that played too closely into the lines of what is under like regulatory gray space in a non-regulatory friendly environment.
Yeah.
I'm addicted to Reddit. I'm probably on Reddit maybe 4 hours a day in various forms, right? So I really, and especially as someone in this space, I really appreciate what Reddit did. Reddit took the plunge and was on the cusp of using blockchain crypto as a competitive edge to their brand, right? And I think they did succeed in that fashion. They pulled off a great program. It was being used. It had wide adoption across the Reddit ecosystem. So it was a success there. It's unfortunate because it proves just how early we are in the space, right? Like, you're in a point now where if you're a major brand and you are trying to dive into this space, right now you're forced and pigeonholed to make a selection of a chain of choice, right? Mm-hmm. And right now, the dominant ecosystem is Ethereum. So Reddit went with Ethereum. And the big reason, at least publicly, why they cited it was scaling issues, bandwidth, transaction fees, and all that stuff. So now what they've done is they've proved out the use case that their community is willing to use this, and the loyalty program was successful. But the core technology is still too premature to support the scalability of what their needs were, right? And I applaud Reddit for doing it. And I think Reddit at some point, knowing how in front of technology they are for their community, will revisit this at some point in some way, shape, form. What I do love about it is it really proved that blockchain-based loyalty programs are only going to evolve from this point forward. I think it's going to be a major customer acquisition strategy for D2C, B2C brands as they start to take loyalty and engagement with their communities much more seriously, right? Especially brands that have substantial followings and want to reward direct engagement with their customers to make them recurring sticky customers and lower their customer acquisition costs. A loyalty program, especially that's built to incentivize, airdropping, certain collectibles, airdropping tokens of that nature. I think that's great. The problem is even successful programs, if they catch the wind of the regulators, especially in a part of the world that there's no regulatory guidance on how you treat these crypto points or crypto tokens, and they could be considered securities because they're speculative, because Redditors are acquiring these points and these NFTs because they think it's going to be of much more value later. That sucks, right? And it kind of makes you wonder, like, what about the Starbucks Odyssey program? That's another successful loyalty program that's right now in a big beta phase. And if no one listening here has tried it, I urge them to try it. But
But that would be regulated simply like a loyalty program, right? And I think that's inherently where like brands have to be very, very cautious about how they undertake these kinds of things. And I also know like Reddit, they moved to a layer 2, right? So they did move to Arbitrum. And I think this is the other point around infrastructure is that like interoperability and like protocol choice is not just a problem at the base layer protocol level. It's also a problem in all of the technological stack that goes atop and underneath it, right? Like you're still needing to make these decisions, and ultimately whatever is intended to address interoperability or scalability, such as a layer 2, is still also presenting the same problem. And so we're no closer to sorting this out. And then at the same time, you have these brands wanting to experiment, but ultimately the regulatory uncertainty of, operating experimentally rather than, sort of going for something that mimics something that is already regulated in the way that Starbucks has managed to get Odyssey out there. It replaces a loyalty program, and therefore a loyalty point is treated or regulated as a loyalty point in like the regular world through your Starbucks application. Non-Odyssey is regulated. And I think that that's really where I think brands have to be very, very poignant about how they go about this strategy and what they're able to mimic depending on how far they want to scale this, and also like what risk they're willing to absorb, which I think Reddit was particularly adventurous with. And I respect them for that a lot.
Yeah, I think it was a lot of fun. I mean, to be clear, I've got all sorts of collectibles, and they're sitting there, and I've never kind of cashed out the moons and stuff. But I think the point I want to make, and I think this is the one thing that we can say all definitively, is we're still so early. If we really look at this, everyone's playing around with it. The technology is very scattered. There's all these little fiefdoms because you can't move things back and forth. Bridges are horrible. The wallet solution is not even close to where it needs to be. And so I think if we really say like where is this going? I think that blockchain is still going to win. I think that we're going to see, the loss, the losses that we're taking right now, and kind of the hits that we're taking of, regulation this, regulation that. It's quite simply because it doesn't make sense to most people. They're not able to kind of really understand what's happening behind the scenes. And I think we're focusing so much on the technology. And I think that's one of the things that I really liked is they didn't call them NFTs. They called them digital collectibles. And if you didn't care about the blockchain, then don't worry about it because we manage the wallet and everything for you. And so I think we're going to continue to see these evolutions, in the same way we saw it, happen quite often. Like there was a point in time when, MTV said they did not want MTV.com because they didn't need it because they had the AOL keyword. Literally these are stories about not everybody understands the new technology. And so sometimes they get comfortable with this versus that. It didn't mean MTV was wrong about having an internet presence. It just meant that they were on the wrong technology and they didn't understand what scale and where everything was going to be going. So I think that we're in for a long ride. I'll take any good news I can, which is, Morgan Stanley saying that the crypto winter is over. Great. Please start dumping money into the market. But Lucia, Siva, I thank you guys so much. It's been a fabulous episode. We really covered a lot. So many great insights. Lucia, where can people find you and learn more about everything you're working on?
Honestly, I'm really big on LinkedIn, probably the platform I use the most these days. So just hunt me down, Lucia Gallardo on LinkedIn, and I'll be most responsive there.
Fabulous. And Siva?
LinkedIn as well. I mean, hopefully LinkedIn is listening to this and they're going to explore some sort of blockchain-based strategy or something.
I'll send it to them. I literally just got back from their annual summit. I gave a talk on at their annual summit, so I will make sure they do.
Fabulous. Well, I'm on LinkedIn as well, LinkedIn/Jay Steinback, because that's where we all are. But most importantly, going to be at Money 2020, going to be over in London here soon. The travel is not slowing down, and I think the innovation and kind of the curiosity is really speeding up. So excited to see all this stuff. Thank you guys so much. yWhales. We'll see you guys next time.
Awesome. Thank you.
Thank you so much.